What is going on, guys? So I'm just going to be showing you kind of the method that I'm about to start using next week for rental properties. So if you guys don't know, one of the main reasons I love Texas is due to the home prices as well as the low mortgage rate. Now again, that has to do with my credit score, my income. I was about to say that in German. I apologize. And all of those factors. So again, this will be different for everyone, but this is just the example that I myself have and that I'm going to be showing because again, personal experience, and I can basically show proof of that. And yeah, so right now this is just all hypothetical here. This will not be fully proven until next week, and I'm just going to be explaining why. So I know Texas quite well. So if you guys want to know where I live around in this area here in the South Lake Grapevine, Keller, Colorville area. So this area is kind of higher up, and now why is this? This is due to the fact to the schooling system. So I'm not a person that apartment complexes, apartments, or anything like that. I am more of a single family home that you can rent out to people like myself, to some of my friends. So more just like that don't make too much money that can still afford a place that doesn't break the bank. So basically I look for 3 bed, 2 bath homes, 4 bed, 3 bath homes, 4 bed, 2 bath homes. I'm really not trying to go above 5 bed, or anything like that. So the house I'm currently looking at, again, of buying myself because I am trying to move out of the area and get myself something bigger and kind of turn it into a 10-year-old's child playhouse mansion thing, with the zip lines, go cards, don't judge me. So I'm looking at about 5 bed, 5 bath, or 6 bed, 5 bath for myself. Now, that I don't know why I mentioned that. That has nothing to do with that. That is a completely separate video. But again, I am looking for single family homes that they can get with 1 or 2 kids, or again, like I said, maybe just 2 friends rooming together. That's pretty cheap on a college budget, or just starting a new job, or just out of college, something like that in a good neighborhood. So this is why I ended up doing Grapevine, Texas, because it also does all the surrounding areas, which is nice and I like it. So one of the best examples, I saw this, and if this is still on the market by the time I get there on basically Tuesday, I will basically take it off the market. So now this house is $159,000. Now I don't like really using a lot of my own money, and why is that? Because I don't like it when my money is tied up in things that kind of are more long term in a sense. Now I have different investments and I have different portfolio allocations. However, I'm more of a high risk, high reward kind of person, and this is more a little lower risk. So I tend to do lower capital because my reward isn't too high in the short term. Now I care a little bit more about the short term than long term because obviously I'm just trying to get the ball rolling. So basically, we have a house here for $159,000, 3 bed, 2 bath, 1,440 square feet. Now the housing market in Texas is absolutely insane. Why? Because people are moving out of apartments and all of that places and trying to get a house with yards just in case something like um, the whole pandemic thing happens again. Then they actually have space and aren't cramped in a 600 square feet apartment by themselves. So this house right here is basically, again, you have to look at all of these houses. You need the background check and all of that, and that is when I message my realtor and all of that. So this house range is around 224. So this means this is quite below asking price, or quite below this estimate. So now again, you can see the housing prices has increased and increased, and they're basically listing this house at the price of August 2016. Now this is great news, and it ended up selling here. That is public record, so that kind of sucks. But again, tax assessment, you can see it is worth this much. So for some reason they're selling us lower. Again, I want to look into why that is. But we go here and we can see the principal interest. So this house, if I were to buy it for this, do a $32,000 down payment, it would cost me $928. Now, interest rate is way too high because this is not what I would pay. So I don't want to get this for 159, even though it is below asking price. I try to negotiate a lot. Now, worst case scenario, obviously cash offers give this the best chance of going through. But again, that is not what we want. So $145,000. Do I want to do 20%? No, I do not. Because like I said, I don't like my cash being tied up. So now I already know exactly the interest rate I get. I'm just going to round it up a little bit. I get a 2.4%, which basically means this house would cost me $58 with a $7,250 down payment. I don't want to do a 30-year fixed. I want to do a 15-year fixed. Now I'm at $1,333 with $7,250 down. Great, very simple. And since me and my partner, we do this kind of together, this house would basically then divide that by 2. This would be around $3,700 or $3,600 for each one of us, which again is not bad at all. So I have mortgage insurance, property taxes. Since it's Watuga, the property taxes aren't too high. Home insurance, HOA fees, nothing. Utilities is what the renter then would pay. This, for example, would be a rental property. So now, why do I want to do 15-year, 1333? Now, since I don't really have time to manage that, I don't know too much about property management, and I really don't care enough to want to learn that. There's a company in Texas that I know that does this. That basically is you pay them $100 a month, and then from that point on, they take care of the properties, finding tenants, and all of that fun jazz stuff. So that means my monthly cost would be $1,450. Let's just round up. Now, this estimate is $1,650. We can just use this as an example. Usually this is pretty spot on. It wavers maybe by around 10% here or there, up or down. So we'll just use it as an example. So $1,650 with property management, it will cost me $1,450. What does that mean? That means every month after renting this out, I would be in $200 profit. Now, that is completely passive, and that is with me just going to look at the house, making sure everything is up to date, making sure everything has been taken care of, and there's nothing in the next 10 years that is going to be too costly. Now, what does this mean? That means for the next 15 years, I would be basically paying off this house, or they would be paying off the house for me, and I would be pocketing $200. Now, what am I going to do with that $200? Am I going to use it to live my life? Am I going to use it to put into stocks or stuff like that? No. So, with rental properties like this, what I've learned is basically I will take that $200, I'll put it into a high yield savings account, so that way I can at least break even or make about 0.5% to 1% on inflation prices. So again, now why would I do this? Because let's say there's something happens to the roof, or the roof just gets old, or something like that that isn't in the renter's insurance, or that isn't in the contract that the renter has to pay for, but it ends up being on my costs. I can dip into that $200 a month fund and basically take that out and then pay for that without then having to reach into my own pocket. And for example, let's say it's a $5,000 expense, and every month I've just been blowing the $200 on freaking clothes. Well, now I have that fund to basically dip into without then having to scram around for $5,000 to take those out of my savings or checking account or wherever I need to get the money from. So that is the example. And yeah, now that basically means within 15 years I would have this house paid off. Now, if after 10 years this house, I haven't had to do any upgrades or anything like that, or nothing has happened, and I still have those $200 per month, then the good news is I can get this house paid off even faster. And again, I can also refinance and all of that stuff. But again, I don't plan on doing this. So this is just a way for me to buy a property, basically make no profit on it monthly for myself living wise. However, have a fund that earns interest, and best case scenario, nothing happens that costs me any money, and everything goes basically 100% perfectly. The house is paid off, and then by the end of that time, after those 15 years, if I do the math here real quick, so $200 times 12 months times 15 years, that is an extra $36,000. Plus, the house should then easily be worth $250,000 to $300,000. Let's just say 250, or let's say 264 plus the 36,000, which means within 15 years, I would then basically have $300,000 pure cash. Again, divide this half and half with my business partner. That means we would have an extra $150, or $150,000 within the next 15 years. I will be 35 by then. Now again, I can sell this sooner, whatever my plans are in life, but this is just the easiest way. I'll let this sit. I do not touch it. Property manager takes care of everything, finding tenants, making sure the house is clean. I just collect the monthly payment, which then pays the cost for the house, which again is all on auto mode. and then the $200 just goes into the separate account. So that is that, and that is my game plan, and I plan on doing this from April 1st all the way until August 1st. So that means April, May, June, July. I have 4 months. I plan to get 4 rental properties in those 4 months, all around the same price. My max budget is $250,000 for the house, because that is the best pricing for maximum single family homes. 4 bed, 2 bath, that is 4 bed, 3 bath, that would be the max price I would pay, $250,000, all around the same area of Texas here, within all this area. And you can see I have 3 bed, 2 bath, 199, 3 bed, 2 bath, 159, 3 bed, 2 bath, 220, 3 bed, 3 bath, 250. That's a bigger home. I would ignore that completely. 3 bed, 2 bath, 239, 3 bed, 2 bath, 185. I would choose this one. I would choose this one. Let's keep looking. Let's keep looking. No, 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 no. Again, it's just based on looking and preference. I would choose that one. If I can get it down to 200 flat, I would not go above that. And you just keep on looking and looking and looking. It is just a game. I would choose that one as well. North Richland Hills, amazing area. Right here, you can see interior is pretty nice. Just put makeup on the pig and it will be good to go. So again, that is how I do this process. Again, all of this is just hypothetical right now. I will be making videos throughout the entire process, the next coming 4 months, how we do this, as well as to these 4 rental properties that I'm getting, as well as my own personal home as well that I'm getting. I'm also going to be doing one flipper up where I just want to test it, how it works. So within the next 4 months, I will basically be buying 6 homes here. So my pockets are about to hurt very deeply. But again, overall, in the long run, literally within the first week of buying that home, I should have a tenant through the property management company right away. So again, pockets shouldn't be too hurt too deeply, as well as I have income coming in throughout this whole process to obviously pay for the down payment. So again, that is my game plan. I'm very excited about it. Hopefully it all goes to plan, but again, nothing ever does go to plan. So that is why I have my rainy day emergency fund. Thank you, Dave Ramsey. And that is it. Thank you guys so much for watching. Hope you enjoyed this video, and stay tuned and subscribe for the next videos coming up. If you guys want to follow along, click that first link in the description, join the Discord, post everything about that. So thank you guys so much for watching, and peace out.